Rates moving higher. Some people questioning those multiples on out-year earnings and revenues for some high-flying technology names. Brent, give me a sense as to the dialogue you've had this week with clients. What are they asking? What are you telling?
Morning, David. Jefferies Tech Desk is for sale right now. Obviously, continuing to see a lot of our clients continue to take profits given last year's amazing run. Last year was a way better year than anyone would have expected. Multiples have been driven to highs we've never seen in stocks like Snowflake trading at 50 times revenue. These are phenomenal stories, but I think everyone's just taking a timeout. We think investors are going to come back to tech, but right now, we're better for sale on our desk. And we continue to favor, at least from a tech strategy perspective, the semi group over software. We think that is still a great sector. And then there's some other sectors such as travel, dating, these industries that are going to open up in the back half of the year, rideshare with Lyft, that are in better positions as the economy opens. So I think we're seeing money flow to other subsectors. And again, I think I call it a timeout. I don't think it's over, but I think right now investors are just awaiting the next turn.
Yeah,
as this rally
it never seems to be over, so to speak, as you point out. They always seem to come back to technology-related names, which are so broad overall, given its impact on the overall economy. But I do wonder, when does that time come? When does the timeout actually end, Brent? Is it when rates sort of not normalize, but level off, or something else you're looking for?
I think this is a bigger macro picture outside of tech analyst view, which is it's more about the rates. That jump has created dislocation. Obviously, we've had a SPAC craze that is coming unraveled in the short term. You're seeing, I think, massive dislocation across multiple sectors, and I think ultimately it's going to take some time. And ultimately, I go back to where were multiples as a software analyst? Where will multiples settle in? And again, I think we're way overextended on some of these high flyers. So our view is it still has some time. We still have multiple correction to go through. The fundamentals are really good. I would just highlight that we continue to see phenomenal spending patterns and fundamentals. So this has nothing to do with the core company's performances. It has more to do with the multiples. So I think we're still, a week or 2 weeks out, depending on how fast we go down on some of these multiples. We still have some downside in the short term.
Brent, just a few minutes ago, we were talking about that controversial and beleaguered Jedi cloud contract that represents something of a dogfight, legal dogfight between Microsoft and Amazon. Whether it's the opportunity within government as sort of this new generation of government contractors, or whether it's the opportunities on the commercial side, how fierce could that cloud fight become, whether it's Amazon versus Microsoft or Amazon versus everyone else right now, especially given marketing spends?
So if you look at the cloud wars, Amazon has 60% market share. Google has 30, Microsoft has 30, and Google has about 10. So Amazon is dominating, right? You look at you can drive a truck sideways through that market share. And in the share is so big. Every major company we're talking to is on AWS. So I would just say that those are the stats. What we would say is that Microsoft has a really good position in the hybrid cloud. They play very well in government. Many of these large companies that are going through regulation don't want all their data in the public cloud. They want this hybrid environment. And neither Amazon or Google really addresses that in a great way. They have some solutions, but we think Microsoft is the dominant force. We think the market's big enough for all three of these vendors to thrive. The market is incredible. It's going that way, right? There's going to be 3 providers, and most large enterprises want 2 backups. They don't want to do business with just one public cloud vendor. So our view is Google's the up-and-comer. Amazon's going to dominate, and they still will have a 20-point lead over Microsoft even a year out from now in our analysis. So ultimately for shareholders, I think there's kind of multiple ways you can win by owning all 3 of those companies.
Shepard Smith here. Thanks for watching CNBC on YouTube.